Today on the CEO Barbecue, we're looking for gold in Ontario and maybe a brief stop in the Yukon as well, together with Onyx Gold. If you want a bullet point summary of this and all the other CEO barbecues in your inbox once a week, go to resourcetalks.com and subscribe to our free newsletter. Now, although the company you're about to hear from has not paid us for the production of this interview, you should still not treat this video as research. Research is conducted by reading the company's official filings, which you can find on setterplus.ca. In any case, please only watch this if you absolutely know what you're doing. This interview is intended only for experienced junior mining speculators because mineral exploration, development, and mining is an extremely tough business where failure is the norm and should be the expectation. This is going to be a conversation that is general and impersonal in nature, and it is also going to contain forward-looking statements. I am not a licensed financial advisor, and my business sells content-producing services, which also makes me biased. Although this company has not paid for the production of this interview, it doesn't mean they won't become a client in the future. They might. So before continuing on, please talk to an independent investment advisor with a good long-term track record because your capital might be at risk. If you're not 100% sure you understand 100% of the disclaimers I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said therein. That all said, Onyx is listed as, Onyx, so ONYX on the TSX Ventures Exchange, where over the last 3 months, the average volume has been about 210,000 shares. The stock's 52-week high is $2.11, and its 52-week low is just 15 cents. Why the large gap between those two will become clear here in a minute. With a market cap of just over 145 million Canadian dollars and 69.5 million shares outstanding, today this is a $2.10 stock with a 50 and a 200-day moving average at respectively 105 and 43 cents, which means that the stock is now trading way above both of them. About 5% of the company prior to a financing, which we'll talk about here in a minute, but about 5% of the company was in the hands of management and board. About 21% was owned by 3 gold producers, and almost half of the company was owned by institutions. Again, those numbers might have moved around a bit in that financing, so more about that later on. The raise that I'm talking about here, that was done without warrants. And so the company also accelerated the warrants that were overhanging since before the recent high grade hits. And so now the capital structure is relatively clean outside of the 4 million options that carry a weighted average exercise price of 42 cents. And there are also about call it 2 million RSUs to add to that as well. So relative to the 69.5 million outstanding shares, that means that the number of shares would grow by just about 10% if all dilutive securities get exercised, which would then result in about an 8% ownership dilution. Again, if, and that's always a big if, but if all dilutive securities get exercised. And of course, this doesn't account for potential dilution down the road, which even though Onyx will have, after this financing, will now have $15 million in cash, it's still not unlikely that there will be future financings, given that this is a pre-revenue company that operates in what is a very capital-intensive industry. Now, normally, this is where I'd go through the company's latest financial statement to tell you about their cash and debt position and everything, as well as how they spend money and what they spend it on. But their last officially filed financial statement dates from September of last year, which is before they had their high grade hit and before the big raise that I was just telling you about. So the company has changed a lot since that financing. Their plans have as well. And it wouldn't really make sense for me to look at those numbers from last September anymore. So I'd encourage you to go to setterplus.ca and look at their updated financials yourself once they become available, which should be sometime in late July or early August. And also stick around for the latter part of the conversation where I'll be asking about Brock's outlook on the financials as well. Enough accounting for now, though, because I've got a brief overview of the company here. Onyx is actually a relatively new company. It's only been around for about 2 years, and it came to be as a spinout from High Gold. Fast forward to today, or let's call it early this year in April, and the company's focus is the 109 square kilometer Munro Creases property. It's 75 kilometers to the east of the Timmins gold camp, where just a few months ago, they drilled almost 70 meters of 3.4 grams per ton gold along the Pipestone Fault, which is important to note, not only because it makes me seem smarter than I really am, but also because we'll talk about the Pipestone Fault later on in the conversation. They're currently drilling a 10,000 meter drill program. They're actually halfway through it, so we'll talk about that as well. It's designed to improve continuity of this new zone while also first pass testing multiple undrilled faults or fault splays and basalt flows across the project as a whole. That's important because it's in the contiguous Croesus flow basalt that hosted the infamous high-grade Croesus mine up there. And this project will be the focus of today's discussion as well. So I'll shut up about it now. But there are also, by the way, a few, I think, 4 early-stage properties in the Yukon's Tombstone Belt, and I'll ask him about them later on in the conversation, though they won't be the focus. For this to actually become a conversation, though, I might have to consider actually shutting up already. And Brock, giving you the word here. But first of all, thank you for being here with me.
Thanks, Antonio. I appreciate you bringing me on to Resource Talks and the CEO of Barbecue.
A pleasure's all mine. And although you and I have spoken before, I interviewed you at PDAC this year as well. And we haven't really had a proper, long form CEO barbecue yet. So we'll have to start with the smell test first before we actually just get into it. But just really before that, it's an interesting story here, especially because of these hits and mostly because of how the market's reacted to it as well. What I started thinking about the first time I saw this was like there are over 50 mines in Timmins. Some saying that there's even close to 80, depending on how you count it. There's roughly 70 million ounces of gold have come out of the Timmins Porcupine camp since mining began there, 115 years ago. So I would have assumed every outcrop, boulder, and moose trail have been mapped and sampled many times over, right? So if there really was another continuous high-grade gold system that is mineable, wouldn't it have been discovered and mined already?
No, it's a great question because we get that all the time, right? But you have to kind of take a step back here and learn about that 115 years of history, right? So in the case around our Monroe Croesus property, we've done almost 30 deals to consolidate that land position. And in 2019 it was less than 4 square kilometers, the total land position. And now, as you mentioned, it's 109. So a significant consolidation, but a lot of those claims that we were acquiring were actually patent claims held by families for 3+ generations. So as you can imagine, that very little to no work was ever completed on them, despite those claims covering or being a very close to proximal to these big structural breaks that are known to host multi-million ounce deposits, right? So that was the opportunity. We, as an exploration company, we took the view, Timmins, largest gold producing region in Canada. The Abitibi as a whole is 90% of Canada's gold productions come from the Abitibi. Within the Abitibi itself is the Timmins Gold Camp, which is the largest gold camp in there. And so what we, as explorationists, is go where the gold is, right? So prolific gold production, as you mentioned. But we took a view within the camp saying, okay, well, how can we create value? And that value creation is, we saw an area in the specifically eastern part of the Timmins Gold Camp, so just about Matheson, we're surrounded by multi-million ounce deposits. We got Fengib, 4.5 million ounce open pit project, Stellar Gold's Tower project, over 13 million ounces, and we're right across the highway from a 3 million ounce underground and open pit that's in production right now, the Black Fox Complex. So we really like this area geologically, but you can see that this area, it was really held back, and you go back again to the history of our property, and we control this mine called the Croesus mine. It was the highest grade past producing mine in Ontario. It produced spectacular gold grades. It wasn't the biggest mine, but it was absolute bonanza grades, 25% weight by gold, 19,000 ounces per ton. Basically, as you can imagine, when that went into production in about 1917, it caused a massive staking rush. So a lot of those patent claims that I was referring to that are held by these families for 3 generations, their great grandfather acquired that claim on the back of the infamous Croesus mine, and they picked up that patent claim in hopes that they could have the next Croesus mine. But sure enough, you fast forward 100 years and no work has been done on those properties. So we've been unwinding that history here and consolidating. And every claim that you buy, you're putting one piece back to the puzzle, right? And so now that we've basically completed that, as recent as last week, we did another 2 property acquisitions for this property, and now you get to see the whole picture, right? Once the puzzle pieces are back together, you can see that picture, and that's when the opportunity, really comes into fruition, where you can, first step is consolidate prospective geology, and then the second is apply modern technology and thinking to opportunities within the targets you see on the consolidated land package, and then validate them through the drill bit, right? So and then you look at our Argus and Argus North discovery. Part of this new Argus North discovery, which has led to such a significant re-rate in our share price, there's a portion of that discovery that was on a patent claim held by a family for 103 years. And basically, same thing. Great grandfather went out and acquired the single cell patent claim in 1922, and they've held on to it for the whole time, and nothing has been done it except for a little bit of logging in the 70s. So that's the opportunity. Challenge is consolidating that much of property is just very, very challenging and time consuming, but the opportunity is clearly there because, we made what could be, it's early days, but what could be, Tim's next great, deposit. So, or zone. So we're really excited about this opportunity.
This sets the stage very nicely for a lot of follow-up questions, which I will get to. But again, smell test is in order first. Let's start with you personally. Who are you, and have you made money for shareholders before?
Yeah, so my name is Brock John. President and CEO of Onyx. I was a geologist out of university. I worked in Canada, Mexico, and Canada. I worked at the Young-Davidson mine and several other projects, Detour Lake, and in the Abitibi. So familiar with that area and the opportunities. And then got out of the mines, got my MBA, and then I worked over 7 years in the sell side. So I was a mining sales specialist at Canaccord Genuity, so selling mining equities to institutions. Made clients quite a bit of money doing that. Raised over $4 billion while I was there, and then I switched over to Cormark Securities as their research analyst, and so I was covering junior and developers there, particularly primarily in the precious metals. So again, there, a lot of my top picks have made clients a lot of money on that. Starting really early, I tend to be the first analyst on a lot of these names. I said I don't mind, not afraid to stick my neck out and seeing some good early, but had strong potential, but early days. Like, for example, I was the first publishing analyst on Snowline Gold when the stock was about $1.70. So that's part of why also I was the first analyst on High Gold Mining. So love the Canadian assets, love the Johnson Tract project in Alaska. So that's how I got to know Darwin Green, the chairman of Onyx Gold and the CEO of High Gold at that time. So when you're a research analyst, you get a lot of opportunities to, join companies. It's almost like you're at a great bus stop. A lot of buses pass by, and you want to think of what bus do you want to jump on. And I couldn't think of a better vehicle than Onyx. It was a brand new spinout, so clean structure, amazing shareholders that were joining, coming into the company. The asset mix was, amazing. I love the strategy consolidation in Timmins, and obviously, I've sipped the Kool-Aid in that part of Yukon about the opportunities with his intrusions, and Onyx is the only other gold company with those intrusions in that close proximity. So that's how it got me excited, and so yeah, I mean I have that kind of rare blend of technical but also capital markets experience. So that was partly why I wanted to be so disciplined for the 10 months it took us to negotiate that property transaction with that family. We could have diluted at 16, 18 cents and gone drill something else and all that stuff that but you're introducing more risk to your story. Or we had cash, we stayed disciplined, you work through that transaction, and obviously you see now in April when we announced the results where we've gone from now to here, and we've been able to raise a lot more money at a much higher valuation and reduce that cost of capital, right, and minimize that dilution to shareholders. So that's something that I focus on, and I believe is really important.
Well, it also seems like you don't only love the Yukon, you also seem to love dogs, if I'm judging by the dog cushion behind you there. Is that your actual dog?
Yeah, well, it's a pillow about my actual dog, yeah, named
Okay.
Shiner. He's a great dog.
What's his name?
Shiner. It's named
Okay.
after a Texas beer. Yeah.
And we'll get to talking about the Yukon, by the way, later on for sure, as I mentioned there earlier. So, because I think those projects they're actually initially what we're focusing a lot on as well. So we'll definitely get to that here, Brock. But do you currently hold any other positions, executive board positions, or anything else with other companies?
No, this is all I have. I live and breathe this company every single day, and I grew up in a mining family, so mining was the dinner table talk all my life. So I think that instilled a lot of passion into me. So, this is a company I really care about, and I will, put my hardest into this company and make sure I do the best for shareholders.
Insider ownership was 5%. I think before the recent financing, if I'm understanding it correctly, did insiders participate in it, and where does that 5% number end up being when accounted for the new shares?
So the deal, we largely did not participate in this financing. Instead, management has been buying in the open market, supporting for the last year. So, I bought close to 600,000 shares in the open market in the last, 12, 14 months. My chairman has bought, increased his position to almost 800,000 shares as well, purely by acquiring in the open market. The rest of management has been putting in and board as well. So, I view as, having attractive deals, buying an attractive deal is one thing, but supporting the stock in the open market, I think is way more important in terms of how I can put an incremental dollar into the company. I rather put it in the open market and support the stock through that than buying at a discount or maybe a unit deal that's more attractive for you. But I rather stick my neck out and support the stock in the open market.
Where does that leave you, all the buying and everything? Where does that leave you in terms of total ownership?
In terms of
Yeah, how many
my
shares
how many shares? I own close to 600,000 shares, and
total?
then obviously warrants, some options and RCs.
Okay. How did you get those shares? Is there any founder shares involved, or was it all just bought in the open market?
Yeah, as I mentioned, just all bought in the open market.
Okay, all of it, and then the warrants in it. That makes sense. 5% still, or well, after financing, probably even lower, depending on how you calculated the number that you have in your presentation right now. But that's still not very high, though. How do you plan to, I suppose, better align insiders with shareholders as the story develops and hopefully grows?
Yeah, I mean, you got to take a step back and see, how this company came into fruition. And you mentioned it's a spin out, right? So it wasn't a brand new company where management was able to participate, put in a few hundred grand at, 5 cents or whatever, and they're going public at 50. So they look like they own 20% of the stock because, they were able to buy a material position at a very low cost, right? So for us, we were a spin out. There was no, cheap stock through this this go public structure. So we bought in at the 50 cent deal like any other shareholder did on the go public, right? So, that's how we've been able to accumulate is through the first couple of financings as well as, in the open market. So, we bought like any other potential shareholder. We didn't get placed. And so you'll see some companies will have a strong material, a large insider position, and you ask them, well, how exactly did you get it? So.
Yeah, that's essentially my job. That's what I do almost every day. But one of your you said there's been open market purchases by insiders. One of your directors, though, Mike Cinnamon, appears to be selling when looking at the SEDI filings. Is that what's happening there?
That would be an option exercise. So that's not he's
Okay,
not selling.
right. Um, let's maybe move on to the rest of the team here now that we've touched upon the rest of the insiders. Who's I suppose you
Warrants.
did
Actually,
be.
sorry. Well, warrants exercise, not options.
Yeah,
Just
that
to
makes sense.
clarify. Yeah.
Who's directing the drill rigs here? I suppose that would be partly you, but who else? And have they made discoveries before?
Yeah, so we have a fabulous technical team, right? So, my exec VP is Ian Cunningham Dunlop. He was the VP of exploration for Long Canyon Discovery, which led to an acquisition by Newmont for $2.3 billion with Frontier Gold. So, he's a well-seasoned exec who's been there and been able to monetize assets from discovery to to monetization. My VPX, Connor McKinley, he's been with the group for many years. He's lived and breathed these assets in the rocks, specifically in Timmins, for many years. He was the regional exploration manager for within High Gold and before that. And so, he's got a great sense of the structures, the geology, and the opportunity. So they're the kind of key guys overseeing it. And then going down the ranks, we have an excellent technical team, from seniors all the way down to the juniors who know the asset well, know the opportunity, well aligned with the team, and are excited to continue to advance this discovery.
Hmm. Do any of them or any of the other insiders personally own a royalty on any of the projects that you have?
No,
Okay.
no.
So
So the royalties are. As you can imagine, by doing close to 30 deals, there's quite
Hmm.
a hodgepodge of different royalties. But yeah, none of them are owned by any insiders.
Well, I did want to talk about the royalty again. It's more complicated though, the situation with the royalties than it typically would be, where you have like 1 or 2% royalties. But with you, it's many more than that. I think we'll touch upon it later on as well, though. Just keep on going with my smell test here. Do any insiders, board or executives, whoever, provide services to the company outside of your regular management activities? I'm talking about helicopter, drilling, camp, or something else.
No.
All right. Still on the same topic, still smell test. Thinking about incentives here, because you've now made a discovery. Market cap has exploded on the back of it, and that's maybe putting it even conservatively. But how do you measure success from here on out? And specifically asking you that in the context of how is executive compensation going to be structured and determined to reflect that success? Like what are the KPIs going to be tied to from here on out?
So we every year we have a comprehensive board review where we have objectives set for the we look back on the objectives we tried to set for, let's say, 2025, and then there's individual KPIs that are based on that have a weighting, right? So my job is obviously, there's share price performance, there's, ability to attract capital at appropriate terms, bringing in sell side research and, all these number of things, overseeing execution, exploration success, right? I have a very, very, really good independent board. So they'll take these objectives and my KPIs, and then they determine my bonus, right? Obviously, cash is king. We like to minimize the cash allocation, and RSUs and options are great, especially RSUs. It's a great way to reward, and it's part of compensation, and it's a way that you can preserve your capital, your treasury, while rewarding and also increasing your skin in game. Like I strongly believe about options and RSUs because it obviously it drives, especially for an exploration company. You want your management team to be well connected to the share price performance, right? And that obviously, as an exploration company, your share price performance is tied to exploration success. So, I want all my, exec teams down to, a junior geologist have skin in the game and wake up every morning saying, what can I do to increase the share price performance? What can I do to really make this company better, and obviously in a good way and in a compliant way? What can they do? And sometimes I don't want guys to come in for a paycheck and they go in, they come in and clock out at each day, right? So yeah, so I think that's an important thing, but I don't think obviously it's nice to see the significant re-rate, but it doesn't overly change. We're not going to be like, oh, wait, we have cash. Let's give out massive, you know, incentives as a reward. Obviously, there's compensation based on my KPIs, and if you see them, there's that metric. But we're all standard market practice. We're not special guys here.
Well, you have delivered on a lot of these goals and aspirations between 2024 and 2025. Does that mean that your executive compensation is going to be much higher this year than it was last year?
That's not up to me to determine. That's I could have suggestions, but obviously we were a very small company,
Hmm.
and we were in cash preservation mode and all that stuff. So, now that we're bigger and all that stuff, and could there be maybe, but obviously, you want to reward success, and so yeah, I mean,
Yeah.
but it's not up to me. Obviously, it's up to my board and shareholders to determine that.
Very well. Enough smelling then in that case here, Brock. Let's talk about these assets that you've got, and specifically, we'll get to the Yukon assets for sure, but the focus is going to be on Timmins and the Abitibi. How did you get them in the first place? Where did they come from? What work has been completed on them historically? You said they've been, held by private individuals mostly, but tell me everything. Walk me through kind of the whole thing of how it came to be from 4 to 109 square meters, kilometers.
Yeah, so yeah, we currently control 444 square kilometers between three properties. The original kind of land position was a far cry of that number. It was a small amount, like I mentioned in 2019. Munro Croesus alone was less than 4 square kilometers. that original core land position is something actually we've had for many years. It was originally acquired by Constantine Metals, which is our parent company, twice removed, I guess, that they acquired in 2007. And they got that through acquiring a private mining company that's had the asset since the original Croesus mine, gold mine company. So the Croesus mine Limited or something like that. And then we've slowly built on that. So High Gold was a spin out of Constantine, when in 2018, Constantine spun out all the gold assets, so Johnson Tract in Alaska, and then all the Ontario Canadian assets as well. So they did a little bit of consolidation over that time. Darwin was taking advantage of a strong share price to do deals, and then basically in 2019 when or sorry, 2023 when we were spun out, High Gold spun out Onyx in 2023. That's when we really took the big consolidation growth in these properties.
This actually might be a good point. I think we'll be back to touch upon some of the points you're making here, but this actually might be a good point or a good segue into talking specifically about the business plan from here on out. Like part of it was, but the first part was consolidating and exploring, but what is it now? Is it a simple discover, grow the discovery, sell the asset type of strategy, or do you see something else happening here?
I mean, our true bread and butter is exploration. We see opportunities like for example, in Timmins, we were taking advantage of bottom of the cycle valuations to consolidate a camp that a lot of people thought was picked over, right? Just like Great Bear thought there was gold exploration opportunities in a group of rocks that for decades in Red Lake, people thought were completely dead, not known to host gold, right? So, you kind of have to have that little bit of an angle, and our view was, let's consolidate a world-class gold camp while it's out of favor, right? And we've seen what happened with Val-d'Or, where Val-d'Or, a lot of juniors start to making discoveries, and then you get a new camp entrant, Integra Gold, gets acquired by Eldorado, and then obviously Anico has been consolidating. That's been its backyard for many years, and we've seen how many 6, 7 juniors been acquired in the last 8 to 10 years. So same thing in Red Lake. You've had the Great Bears, and then you had the Battle Norris. Like Evolution too came in, the Aussie company, and acquired the Red Lake assets. So but Timmins kind of hasn't seen that, right? So we were saying, okay, well, let's get while some juniors were exiting, let's actually do the opposite. Let's go consolidate fragmented ownership, areas that have tremendous geological potential but have been held back largely because of people, right? And so let's do that. And while we're doing that, we're taking advantage of bottom of the cycle valuation. So now you fast forward today, you got Tony McCooch with Discovery Silver acquiring the assets from Newmont, because that's something that's ultimately for explorationists. It's been hard to hang around in Timmins when your exit strategy, aka being acquired by a producer to fill the mill type of strategy, isn't those owners of those mills deem those assets non-core, right? So in the case of Newmont, it's a great asset, but it's not a strategic tier 1 asset for Newmont, right? So getting through that, and now you have obviously Discovery Silver, that's its key. It's bread and butter. Tony's, a Timmins native, and he sees a tremendous amount of low-hanging fruit that he can make that a tier 1 asset. But the mill's half full, right? So for us, the strategy is, you have to show, and we have a slide in our presentation, there's, 5 or 6 hungry mills within 100 kilometers of this discovery, right? And, you could easily truck this type of grade to these mills. It's very simple to do that. And so, for us, you have to show an exit strategy for shareholders, right? You don't want to be a big discovery and then it comes, now what, right? You're 200 kilometers away from infrastructure, and you don't have the grade or the tons to make it economic, right? For us, we're right across, we're 2 kilometers away from a highway, and we're 3.5 kilometers away from a producing mine that is actually already trucking 3-gram ore 45 kilometers to their mill, right? So we're already right across the street from a hub and spoke, mining operation, right? So, and we're on patent claims in the middle of nowhere. So, this is the opportunity is, even 300,000 ounces to 3 million ounces, they're all strategic, right? So, and what is those 300,000 ounces that have good grade margin are key for these guys, right? So, something that could be 5 million ounces of 1 gram, but it's not close to infrastructure and could be challenging, could be trading at, I'm just going to throw some random numbers out, like $40 an ounce, right? On an EV per ounce. Like, but, something for us, because we're so strategic and it's easy to mine, like I hope, you know, it could be, magnitudes of that, it could be $400 an ounce, right? So it doesn't have to be big in order to be really relevant and also attractive in terms of M&A, right?
Mhm.
So that's what we like. We like these mature camps. And then also going back to what I said about, we're really explorationists and we take these views like, our Yukon assets were basically the same. We went at Constantine at the time in 2010. We got these assets because we staked them in 2010 when, we took the view that could we stake a bunch, go out there, stake a bunch of land, spend $1 million and get a material piece, what could be the next Carlin? Because, this was right on the back of ATAC's, Carlin style discovery.
Mhm.
And so that was the view, right? And that was the same time as Scott and Ron Burdell were out there staking their claims and became, ultimately what was Snowline, right? So we've been able to hold on to those assets because we've seen those. So we're not afraid to be first movers and see a strategy and create value through that. And I think that makes us a little bit of a unique company. And then you can combine that with, a really tight share structure, low share count, and some really quality institutions and as shareholders as a whole. That sets up a really good investment vehicle, right? That's the opportunity of Onyx.
Well, you say not big, but how big? I mean, and what would maybe the profile of a discovery have to be in order for it to work with this strategy? Because you gave me kind of a wide range there, but what is it that you're really after here?
So, obviously we're surrounded by multi-million ounce deposits, and we hope, Fen Gib is 4.5 million ounces, and it's hosted by the Pipestone, 6 kilometers away from our new Argus discovery, which is also hosted by the same structure, the Pipestone, right? So, if you filter out at Fen Gib, they got it's over 600 holes into that resource, about 160,000 meters or so. And if you filter out any interval greater than 10 meters of 2 grams, that original discovery hole, August North, at 69 meters of 3.4, that's the best intercept in their database. So that gives us, it's early days, so I can't say that, but we just announced another another four holes, and two of them are fabulous. Another over 150 gram meters. So we have three of the four holes announced today that are over 150 gram meters in a brand new discovery. Again, that gives us a good, it's like it's early days, so there's a lot of disclosure here about, we got a lot to prove here, but that's giving us a lot of confidence that there's a strong mineralized system here, and it's hosted by a major structure that's known to host multi-million ounce deposits. So, that's the what we really want to go for is the big multi-million ounce discovery in Timmins, and have that success. But I would even say like, Alamos, is for their Young Davis operation. They have a deposit called the Golden Arrow deposit, and it's about 100 kilometers away from Young Davison by road, and it's about 360,000 ounces, about 1.1 grams open pit, and they plan to mine that as a hub and spoke and truck that 100 kilometers to Young Davison, and they believe they can make money doing that. So even a 360,000 ounce 1 gram, 1-ish gram, could be relevant in a hub and spoke operation in Timmins. And then that's all thanks to the legacy. All the infrastructure has been paid for, right? So the mills and all the stuff. So like you're just looking for incremental mill feed, right? And so that's the opportunity. So there's your spectrum right there. Like you already see a gold producer is already advancing a deposit of that size and scale, and they believe they can make money. Imagine what we could do, and that's, that deposit is about 17 kilometers south of this Argus North discovery, right? So, and we're finding something that is, 18, 20, 30 meters of 5 grams within those big, broad intervals. So, you can mine that all day long, and it's five times the grade, right? Imagine what you can do that if you mine and truck that. But it's early days, like, I got to caveat. I can't say, well, I got something here and, and tell you, bull face, but, we're excited. There's a lot of things to give us encouragement about, where this could go based on the strength of mineralization, how it's hosted, within the pipe zone or proximal to it. So, we're really encouraged by that, but obviously we got to prove that with the drill bit. And that's why, it's our first press release. We got many more holes to come. So stay tuned.
You make a very good point there that it is early days and nothing is guaranteed, definitely not in mining and even less so in exploration. And what we're doing here is definitely forward looking. So for people listening, go back to the beginning, read the forward looking statements that were disclaimer that was presented in there. But also, no, well, Brock, I understand this is a little more than just guessing here, and it'd be hard to answer this question. But given the nature of mineralization, everything you're dealing with here, how much drilling and how long could it take for that plan to actually materialize and you make money off of it?
Yeah, so I mean, the great thing is we got two drill rigs and over halfway done our phase one 10,000 meter program. As I mentioned, like we raised about $15 million of total proceeds of the first half of this year through our warrants and our $13 million oversubscribed financing. And so, a 10,000 meter program in Timmins is about $2.3 million max. And so, we're well funded. I can view that as just like I said, a phase one. I wouldn't be surprised we'd be drilling more, but that's also forward looking. So we got to continue to deliver with the drill bit, but I'm excited. We got, like I said, lots of news flow coming. We already got the funding out of the way, and now we're just drilling, and we're going to be quite newsy for the rest of the year. So I think we're setting up 2025 is setting up to be, quite a really exciting year for the company, especially if we continue to execute with the drill bit.
Why I'm asking that, or what I'm thinking here, is because you often compare, you brought it up earlier as well, to Fen Gib, right? And I think Holt Holloway as well. But they have both took, I think over a decade each to get going. Granted, a very long time ago, so different world right now. So that's why I'm thinking, what's kind of a realistic or comparable timeline if you look at what's happened there?
Yeah, so Fen Gib it's a great asset, but it's traded hands. It was originally discovered by Pangea. Pangea was bought by Barrick for its West African assets. It was basically sat on the back burner for many years, and then Tony with Lakeshore bought it for $60 million Canadian, I believe in like 2011. And then it was Lakeshore was acquired by Pan American, and Pan American, it wasn't a strategic asset. So and then it was bought by the Mayfair guys in 2020 for about just under 10 million bucks. So it's a good asset. What's really compelling about it is it's a very consistent ore body. So it's not, it's sub a gram, which I think maybe held back because obviously in the 90s and early 2000s when gold was, in the hundreds of dollars, it's kind of doesn't really work. But now, over $3,000 gold, it's something that it'd be a really robust system, right? And so, I think that's what's there. And I think they're coming out with an economic study later this year, I believe. And I think that could really help demonstrate, unlock some value there for them. But they're not unique though. There were a lot of these big low grade bulk tonnage systems in Ontario that sat around forever, right? And there still are some, right? Even Hammond Reef within a Nico. There's the Spring Pole. Like there's all these monster deposits I've sat around, and you see, and there was a little bit of, I think, apprehension about the opportunity of these 1 gram systems. But obviously you've seen what happened with Detour. You've seen what happened with Malartic. They've turned into great successes, even though there was a lot of doubters. Even when they were in production for many years, it still took them, many years of producing to convert the disbelievers. So I think that was a big thing too. Is people still were thinking about opportunities in the Abitibi as it's always high grade underground. And we got it's orogenic veins and not these big kind of replacement style. And obviously you see what happened with Great Bear, like a $1.8 billion transaction pre-resource. And because they found a replacement style gold deposit along a major structure in an area that no one thought there could host gold, right? So That's the evolution of these camps, high grade underground for the last 100 years to bulk tonnage, big scale open pits, right? That a lot of these were halos like Detour, high grade underground mine converted into a mega open pit, right? Same thing as a Malartic, high grade underground converted to an open pit, right? So that's what you're going to start to see more and more of.
Going back to thinking about the timing here, really why I'm asking that as well is because I'm thinking how long, how much money, and how much more financing is that going to take? What did you say this program is going to cost you? $2 million?
Yeah, 2.3. Our all-in cost is about 215 to $220 range. Sometimes better, like almost $200 sometimes. So, you know, that's one of the best, that's Canadian dollars too per meter in the world, right? Our drillers, I was just up at site last week. I've been trying to go every few weeks now and, talking and getting to know our drillers at Major. A lot of them live, half an hour, 45 minutes away from the drill rig. So it's pretty fabulous for them. They're drilling 12, they're doing 12-hour shifts, but, their commute is super easy and they get to go home every night. And it's a really nice place for them to operate. So we got happy drillers and happy crews that translate to great productivity. And, Majors have been a great partner with us as well. And so, yeah, it's a really good dynamic. And that's really nice where we don't have to pay for anything in terms of camps or anything like that. So, Timmins is a great place to be exploring. That's for sure because of that mature infrastructure.
No need to raise any more capital though this year. That's what I was getting at. Is that true?
Yeah, yeah,
Okay.
no, that's the plan. Like I said, we can drill. We have plenty of flow through, and we can drill 25,000 meters before without even batting an eye. So, yeah, stay tuned. We're just going to be drilling, and hopefully we can keep executing, and that's what it all matters, right? Yeah, it's up to us now you know, to talk to people with you, like to tell the story and garner more interest in this discovery, and also to our execute, technical team to execute with the drill bit. Obviously, Mother Nature, geology is a black box, and but we're doing our best to analyze, to drill, analyze, and to learn with every hole. Each hole's getting that valuable insight, about the geometry, the scale of the system, and what's really cool. What we're seeing, for example, we're starting to see this more fragmental, unit that looks like it's parallel to the pipestone and to the geology. So that's to us, it's implicating like this could be a northern splay of the pipestone that was never previously seen before, which it's obviously got scale implications, right? But that's early days. That's very forward looking, and we have to be able to execute with the drill bit on that. But it's pretty exciting when you start to see that, picture as you start to add pierce points and understand the plane, the geometry, and see, okay, well, how can we continue to step out and really create scale for our shareholders and ultimately lead to that re-rate.
Talk to me a little bit more of that drill program then that you've got going on. You say you want to keep delivering, executing on it. You're drilling 10,000 meters, 2 rigs. You're about halfway through, as far as I understand it. What are the goals? What are the aspirations for this program? What do you hope to see here?
Yeah, so the design of this program was to follow up on that one discovery hole, right? So Argus North, we, if you're taking a step back here, we discovered Argus North by drilling the main zone 100 meters to the south. Argus Main is a more of a half gram to 1+ gram system, bulk tonnage open pittable type opportunity. While we were drilling that, we extended one hole because we saw some encouraging mineralization, and that's when we hit this lower zone that's 100 meters to the north of the main Argus, and so it was one hole. So we had to validate it. It was 69 meters of 3.4 grams. Within there was almost 35 meters of 5+ grams. So a fabulous type of intercept. But it was one hole. So this is what this program's designed to do is materially step out. So, we completed that fence, but we confirmed already with that press release we did on Thursday last week. That was additional holes from that discovery hole fence. So we drilled a below and above it, confirmed now we have over 100 meters vertical continuity of some really nice mineralization. And then we've now been doing 50-meter plus step out, fences. So 50 meters, 50 meters. And so we continue to step out with those 2 drill rigs to expand this discovery. So all this meterage is going to expanding this discovery. We're not infilling here, and we're Yeah, just trying to test the limits on this thing, and it's exciting times. So it's just to maybe paint the picture of this opportunity. Timmins hasn't seen this type of grade and tenure in terms of a greenfield discovery in many years. So I think we're just at the beginning in terms of our valuation re-rate here. If we continue to execute with the drill bit, we've seen what the market is willing to pay for these new discoveries in mature camps, right? Or even elsewhere too. Like there's some, the stuff in, the Guyana Shield and stuff out west. But, obviously Cisco Mining comes to mind. That was a material transaction. Great Bear was a material transaction. You look at the valuation of Snowline, the valuation that these Canadian discoveries get are quite great. So, I think as we define this, I think we can continue to re-rate. And again, it goes back to what I said earlier, is there's a lot of hungry mills. There hasn't been a greenfield discovery like this and in Timmins in many years. And obviously we got to grow this thing, and that's forward looking. But we there's clearly a need for that because a lot of the mills have a significant amount of excess milling capacity. So the mills are hungry, and what are they willing to pay in terms of a per ounce dollar to get those high margin ounces into their mill, right? Because the mill's built, the tailings facilities are there. So they don't have to build these big capex line items, right? It's basically, can you permit something on patent claims when you own the mineral rights and the surface rights? And you're in mining country, so we have great exploration agreements with First Nations. Like it shouldn't take much. So there's a way for these producers to pay a top dollar for these ounces because they can make a lot of money off of them.
Hmm. If you had to summarize it, though, or be more specific on this, what would you consider success from this program? Like if we're talking, call it 6 months or whatever, and you look back, what do you want to see in order to feel successful, I guess?
Yeah, I think, if we drill 25, holes, and if, eight plus of them are as good as this, what we've seen, like 100 plus gram meters, that's really good. I think that market would really like that because you look back at where a lot of these multi-million ounce discoveries translate into. You see these, $2 to $5 million, 2 to 5 million ounce open pit projects.
Mhm.
You see them as that. But look back when they drilled the first 20 holes and say, okay, what were the first 20 holes that ultimately created this multi-million ounce, deposit? And you look at that, anything over 100 gram meters, and if you're hitting that in a decent portion of holes, you're off to the races to something pretty significant because those intervals don't just occur by themselves. Tend to lead the witness to something that could be, ultimately multi-million ounce discovery. And obviously that's very forward looking and there's a caveat to that. But, those are the type of things, as an early stage investor, when I was an analyst, how can I filter out the noise from the opportunities? And a lot of that was, looking at those metrics, like seeing that and looking at your database and seeing, okay, well, this deposit ended up like this because it started kind of with these type of drill results. If I see that with a new project or early days, there's potential. There's always risk, obviously. Like I said, geology is a black box. You don't know until you really drill it. But those are the metrics that can help you, guide you towards, filtering out some really good opportunities.
That's a good, answer from a technical perspective as well as from a business development perspective. But I'm also thinking, to your last point, what about from the market's perspective, though? And I mean, after the recent capital raise, the market cap is now closer to $150 million on really just a couple of holes so far. So, what do you think the market wants to see in order to not only allow you to keep this valuation, but also to keep pushing it and hopefully growing it?
Yeah, I think expanding it obviously is key, and so continue to step out, which we are in the midst of doing. And then also like I said, we're well capitalized, so I would love to continue to this whole property is we got 35 plus amazing targets that have seen little to no work by us because we've been capital constrained, right? We've been laser focused on what we could execute as a small company. Remember, we're 10 to 20 million market cap for most of our life as a spinout. And so we had to be very disciplined in what we could execute on. Now we have a good budget where I can say, okay, 10% of our drill budget actually can go out to hit, these new targets and generate, and they're fabulous. Like we have some areas that are bulk tonnage, and we have stuff that are super high grade, right at 2,500 grams per ton in a vein that this old timer blew up in the 90s in a trench, and it hasn't seen any real work since the 90s. And it's like, cool, like let's go look at that, right? So now we have the ability to do that. So I think so. What will help backfill is obviously the lion's share of the focus is going to be Argus North. And then we made that new high grade vein discovery, the GM vein, which we haven't really discussed about, which is by that, that Croesus flow, which is that important geology host for the historic Croesus mine. And that vein is only 350 meters away from the Croesus mine in the same geology. And we're getting 360 grams with visible gold in a vein. That's pretty cool. And it's only 60 meters below surface. So that needs more work. So, we got a lot of, I think Argus and Argus North could continue to drive us higher in terms of with further drilling success. But I just can't wait till start drilling these other stuff too. That's going to really surprise. There's a potential to surprise the market with another discovery, right? And then the pipestone, as we've been consolidating here too. We control 8 kilometers of the strike extent of the pipestone now. So, there's a couple kilometers before we hit from Argus, before we hit the property boundary. And then we have 6 kilometers on the east side between Argus and Fengit. So, and it's grossly underexplored. So, that is a great opportunity as well as, there's a, what are the chances? And we have a long section. It just kind of demonstrates the dearth of exploration on our side of the property and that strike extent of the pipestone in our presentation. So, it's a little promotional, but it just kind of the takeaway is there's a lot of hunting here. That there's terrific hunting ground for more deposits, right? So, just to recap, I think Argus and Argus North have easily the ability with further exploration success to drive us higher in terms of valuation, share price performance. Because, like I said, as this becomes more and more real, this becomes more attractive, for camp incumbents or even new entrants. Because frankly, it could have that scale for a new entrant to come to this camp, right? But then we have amazing targets that we love to continue to drive. That could be some great surprises to the market as well.
I want to get into some of the technical details that you have here and better talk about the project from the geological perspective. What's your biggest concern, though? What's the thing that still keeps you up at night when it comes onto the rocks?
I mean, Abitibi is, if you're familiar with the Abitibi, obviously it's 90% of Canada's gold production. So fabulous ounces, but it's old rocks. They're 2.5 billion years old plus. So they've had a tough life. So they've been faulted and folded and all that stuff. So fortunately with our capital, we can continue to drill and figure it out. But there's always structural complexity that you have to learn by drilling, right? So plunge, and that's what I mean about as we step out, we get a much better handle on the geometry and the opportunity, right? But that's always a risk, right? That's geological, structural, technical risk that happens at any mine in the Abitibi, and you see it, but then you learn from it, and you can move on, and you can hit it. So for me, that's always it's geotechnical success, right? But that's no different from any exploration company, I guess.
Mm. Well, some of the intercepts you've been announcing have intervals in them that are sub 1 meter, sub half a meter even at times. And the grade can vary from under a gram to over 12 grams within those intercepts. So does the potentially nuggety nature of mineralization and the width variability here worry you?
So it's actually the opposite. Argus North has got fabulous continuity. I refer you to, the hole 163 discovery press release from April, as well as last week to our news release. You'll see at the bottom, we actually break out the 5 gram plus interval with every individual assays. And you can see, especially with hole 168, the 17 meters of over 5 grams, how consistent the grade is. And so that's the great thing about the geology and the mineralization style here is this is not orogenic veins carrying the grade that we stretch over widths. This is actually, it's a gold replacement style. So it's actually, the host rock is a varolitic basalt. It's very iron rich. And as it's been fractured, the fluids have come up and permeated through. And the iron has been a great chemical trap. So it's converted, the iron is mixing with the acidic water that's got sulfur and gold in it. Sulfur and iron mix, creating pyrite, and the gold gets attracted to that, right? So you look at our actually, and we put some core photos as well. You can see it's pyrite stringers and all that stuff. So that's where you can have such a continuity of grade throughout the zone. Is because it's actually the sulfide and alteration, which is associated with the hydrothermal fluids that drive the gold, not orogenic veins. Like I said, that can be pinch and swell and carry a lot of grade and becomes nuggety. This is actually, even you look at our presentation, did put in that April press release as well, where we actually put out photos with each assay on the core boxes, and you could see that 34.5 grams of over 5 grams, that's what catches the interest of corporates and others is you can mine that today. Like, because you look how consistent the grade is, the dilution, internal dilution is very low. So, that's what gets a lot of people excited about this. I think that's what, the sophisticated buyers are looking at this. What's driving our stock higher is, this is a brand new discovery in Timmins, and there's a lot of all that. But you look at what's under the hood, this is a very robust mineralized system. And again, that gives us, some encouragement that this thing could have scale. But obviously, like I said, it's early days. We have to continue to drill to validate that.
So if we go back to that plan of yours and look at the mills in the region, what's the cutoff grade that they're working with?
So the variable, so like I mentioned, the closest one to us is Black Fox, and they're mining. Their average width is about 3.5 meters, and they're mining about 3 to 3.5 grams. And they're putting that, so that's underground. They're trucking that 45 kilometers to their stock mill, and they're making money doing that. The other major one is the Porcupine Complex, owned by Discovery now. So they have three different mines that are actively feeding that mill. They're milling about 7 to 8,000 tons per day, and it's about a 15,000 ton per day mill. So the mill's about half full. They have two high grade underground mines, so their cutoff grades will be higher. But one Borden is about a 5 to 6 gram kind of millhead grade that's coming out of that, and then Hoyle Pond is one of the highest grade underground mines in Canada. It's about 16 plus grams or something like that, and then they're blending that with the Palmer project, which they just finished dewatering, and now they're open pit mining that. It's about a 20-year mine life, about a 1.1 gram, and they have to truck that about oh gosh, I forget exactly, but it's about less than 10 kilometers to the mill.
So if we said
So
2 grams cut off, that would be conservative. And then for you, that would also be, I mean, for you, that would also work.
yeah, so like Fen Gib right beside us is about a 0.2 gram per ton cutoff, right? So, when we report 91 meters of 1.8 grams, that is 110 meters vertically. That's open pit. And you can mine that down to a 0.2, 0.3 gram cutoff, and all that would go in, right? Or you can say, that's 17 to 35 meters of 5 grams, that high grade. Let's focus that as a high grade underground. You have a 2 gram, cutoff grade. You're still then more than 2x the cutoff, the grade to cutoff grade. So you can make great money. So, you can even say this in, gold is about what 105 US a gram right now,
Yeah.
so about 145 Canadian. You can open pit. Your total cost per ton processed for an open pit is like $22 in Canada, right? And at 2.5 grams or 2 grams, that's 350, 360 Canadian a gram, right? Or sorry, that intercept. So
Hmm.
for that grade. And that's assuming 100% recovery, no royalty. Like, there's obviously some caveats to that, but it gives you the idea of margin. Even if it's, underground mines are about 100 Canadian a ton, right? So if you got stuff that is at 2.5 grams, that's still $360 a ton, right? Of value, of in situ value rock, and your mining costs are going to be 100, right? So these margins are great. I worked at Young-Davidson, and they're mining 2.2, 2.5 grams. Their average underground, their average stope width is about 32 to 35 meters, and they're down 1.5 kilometers, and they're mining 8,000 tons per day making gobs of cash, about 75 million US of free cash flow a year. So, that's 117 kilometers south of us. So, so these 2.5, let alone 5 gram intervals, you know, we're not even just limited to 200 meters in the upper crust, that could go in an open pit. These type of widths and grades can go down a way. So that dramatically increases, the footprint we can find this on a vertical extent, right? So we're not just limited to the upper crust. We got a huge envelope we could drill and discover ounces because we see the analogs in the camp of how much money Bell Creek and, the lakeshore assets are 3.5 gram. They're mining underground, right? So you look at that slide that in our presentation of all the mills, the average mill head grade is between 2 and 4 grams, right? And we're finding that in this discovery. And that's why it's so significant, right? And again, the context is everything. We're 2 kilometers away from the main highway. We're all on patent claims and we're surrounded by a producing mine and 100 years of mining production. So, and there's no significant, populations around us. So it's a perfect place to be discovering. There's a gas pipeline on our property. There's power lines, there's power. So it's everything you want, to find. So it's a great place to be hunting.
And again, considering or assuming that the other stuff work as well, that is a good explanation. You did mention that geometry essentially, or the geology as a whole. When I ask you what worries you about it, what do you know about the geometry so far?
Yeah, so it's steeply dipping. It's looks to be parallel to the stratigraphy, or more or less, and the pipestone. So kind of generally east, southeast, kind of that general trend. And we, as we've been drilling, you've been figuring out the plunge, right? So the plunge was the big one, and
Yeah.
now it's looked like we've got a really good handle on that. So you figure out the orientation, but yeah, so that's kind of what we can say to date. Like I said, we continue to step out and learn with it. Every drill hole brings invaluable insights and onto that opportunity. But no, we're learning, and but we drill with oriented core, so we have really good understanding of the substructures. The biggest thing, like I said, because the one discovery hole, it was a single hole, so you need 3 pierce points along a single plane to figure out the plunge, right?
Yep.
So that's what we've been really focused on, and we're really working on that and drilling and having success. So we're excited, and yeah, obviously only so much you could say.
That's fair. And I guess next time when we're speaking, you're going to have more to say about that too. But
Yeah, absolutely.
also, as I understand it, the story here is largely dependent on you understanding that steep shear here, if I'm understanding it correctly. How sure are you about that, again, orientation and size of the shear that hosts Argus North, and how well do you really understand the structural setting here?
Yeah, no, like I said, with every hole, we're learning a lot more. But no, it's you can see these general fabrics within the camp. Tend to these structures, mega structures like the porcupine destor, the pipestone generally be broadly east-west direction. They do wiggle a bit. And then you have these northeast trending subsplays basically that are perpendicular to the major regional faults. So porcupine destor is the mega structure within the Abitibi, and then the pipestone is a northern splay that's parallel to the porcupine, and then you have these northeast trending. So there's a repetition within the camp in terms of the fabric that you can see, and it's all the similar to what we see. So we're not finding anything out of the ordinary in terms of structures and geometry that isn't what you see in the camp. So that's great. And then it's just now you're as you drill, you're starting to refine the micro, more of the micro scale understanding of the geometry and structures and all that stuff, which is obviously you got to drill to figure it out, right? And we're certainly excited about it, that's for sure. And we wouldn't, there's only so much I could say, but having 2 rigs and continue to step out, I think says a lot.
Hmm. Having 2 rigs does help, for sure. So in terms of timing, and I'll ask a timing question here in a minute as well. I guess grade and width variability is not the only variability that one should be paying attention to, especially when we're talking. What we're talking about here is basalts and Timmins, right? If I'm understanding it correctly, they could also mean metallurgical variability. I know it is early days, and I know you're going to have to figure out more over time. But what do you know about the metallurgy today, and what are you doing about it this year?
Yeah, so we're gonna do a bunch, very like very limited knowledge, I would say overall, because we haven't done, proper assay, digestion, cyanide digestion, all that stuff, which we are planning to do this year. We also in the midst of, petrology, thin section analysis as well. But from what we can see so far, it looks like the gold is associated with the pyrite, but not entrained within the pyrite, so it's not refractory. But we have to validate that. But from what we see, we have very limited to nil arsino, which is a great, that's a great sign on metallurgy as well. So very little to no arsino, especially at Argus North. Because you have to watch out, the pipestone can be pretty arsino rich, but this is what we don't see that, which is very a great metric. And also, we do see occasional visible gold as well. So that does show, demonstrate the metallurgy as well. So, we got to, like I said, it's early days, so we got to validate it, and that's a key step of our de-risking program this year. But so far, we don't have any concerns about it, having metallurgical issues.
Is that a widespread thing, refractory gold in the Timmins? I thought it wasn't, or I mean, what's the history there?
Yeah, there are a significant amount of mineralization that is refractory. So,
Okay.
one of the things, you refer to, Tony McCooch's, recent presentations, a big component of that is talking about building a potentially an autoclave, right? Because if you built an autoclave in Timmins, you probably secure, almost a generation's worth of ounces you could liberate. But because I've said the last 100 years have been focused on the non-refractory stuff. But in our case, we don't have refractory nature, but we have to validate that. So,
Hmm. Okay.
but yeah,
Um,
there's actually a significant amount of refractory mineralization, which is good.
when do you think you're gonna have some, or when are you gonna know more about that? When's the market gonna know more about it?
About the metallurgy,
Yeah.
we're in the infancy of that, so we'll report at a later date, likely later this year. Because
Okay.
we were just getting meterage, right? Like we're just drilling it, so we're just having the volume of core to start to
Yeah.
analyze, right? So, we're at the very beginning because we're just in the productivity of getting the rock necessary to do the assay. So,
Hmm. Well, and
analysis.
still, again, early days, still a lot of unanswered questions here, based on what I'm getting from you here. Is 10,000 meters really enough to answer, all of them or the majority of them, or do you think this program might have to be increased?
Yeah, I mean, I wouldn't be surprised if I mean, we have the capital to do it. And, we just kind of throw it a 10,000 meter phase one because it was a good amount of meterage to really understand, the near term, orientation that gives us confidence. So, I wouldn't be surprised if that meterage would grow. And as I mentioned, as we say, it's a phase one, right? So, yeah, to be determined. And we look forward to updating the market at a later date.
Hmm. Um, yeah, it doesn't seem like you can tell me much more about that. So I guess I'll leave it alone for now. You've had some assays come in already. Maybe summarize on what holes are left to report on and when those assays are expected.
Yeah, so according to the press release last week, we had 17 holes complete, about just under like kind of 5,600 meters. We've obviously been drilling since then. So we have 4 holes reported to date. Two were the first kind of follow-up holes that were step outs, and then two were the extensions of previously drilled holes. So the rest of the holes are all step out holes that are pending. So we got a strong news flow, that's already pending, let alone the fact that, like I said, we're just over halfway completed this phase one. So we got a lot more meters and holes to complete. So we got a very significant amount of news flow. And I would think, sometime later July would be a reasonable expectation on I'm hoping kind of every month-ish, depending on the assay labs and turnaround. But that'd be kind of the goal. It'd be kind
Okay.
of once monthly, if not, can pick it up a little bit more.
Hmm. Is there? There's a bit of seasonality, I suppose, related to your exploration here, but I suppose you'd be done long before that.
So the great thing about this area, well, frankly, all of our properties in Timmins is we can drill all year. We have no restrictions.
Okay.
There's a couple of targets that are more favorable to drill during the winter time, just because the ground is softer. But Argus is a year-round target, so we can be here which I hope with further exploration success, I can go to the market and follow up with you, have another call and just say, Antonio, we figured out the ore, we got everything, we stepped out, we got the real great understanding. We're going to have, two to how many drill rigs it is for the rest of the year. We're just never going to stop, right? I really look forward to that, that call. It would be
Hmm.
awesome.
Yeah.
But we got to get there. We got to execute more too, right? That's a forward looking. But that's what gets me excited. This looks like something special. And but like I said, I got to be disciplined and say we got to realize it and execute and validate it through the drill bit. But I would love the day where I could just say the rigs are never leaving this thing for the next 2 years or whatever
Hmm.
it is, right?
Yeah. Visibly too, you're getting visibly excited, which I do appreciate. It doesn't happen to people often when they talk to me, especially. So it is good to see. How is the accessibility and everything? You said you close to a highway there. How's topography and I mean situated for me here?
Yeah. So Timmins is obviously pretty flat. So that the access is actually quite easy. So like I said, we're as a crow flies, we're directly Argus, and Argus North is 2 kilometers directly north of the highway. We access it via there's a paved road that goes right into the heart of our property. There's a previous past producing mine that was mined till the 70s. So there's actually a paved road that we get great access to our property, which is awesome. And then we have a just a like a an access trail that's 2 kilometers. Kind of you go up north into our property, and then you go west along a driller's trail, basically, and easy access. We're looking to upgrade it more, and like as we think could be the real deal, we're obviously going to make ourselves a little more comfortable with the access in terms of bringing some make upgrading it a little bit more, but it's you can get there super easy and all year, which is
Hmm.
great.
What about drilling conditions from the perspective of lithology? Is there a cover? Is there anything challenging that you're dealing with deeper? What does that look like?
Yeah, so one of the great things about Argus is as a whole, it was a discovery that was kind of staring at people's face for a long time because it outcrops on surface. Like they basically, and then Argus West across the fault is a 950-meter long ridge of variolitic basalt, the host rock. And our geologists have done prospecting and getting multiple gram gold from grab samples out of the outcrop, out of the ridge, and it's never been drilled before, right? So and there was some historic trenching on the eastern part of Argus, Maine, where we kind of made that original discovery in 2022. But apart from that, it was overlooked because everyone was looking for orogenic high grade veins, right? This is 3 kilometers away from the Croesus mine. So when people were last looking at this prospecting around was in the early 90s. And yeah, they were getting half a gram to a couple grams in a variolitic basalt with no veins. They looked at it, they're like, that's interesting. But when gold's $300 an ounce, it doesn't move the needle, right? So it was completely overlooked. And it was us to drill it. It was, I guess, high gold in late 2022 when they drilled it, and their discovery hole was 136 meters of 0.54 within their 63 meters of zero point 0.8. So we were like, oh, here's a bulk tonnage system that outcrops at surface and staring at you in the face. But it was always overlooked because, like I said, everyone was on the hunt for veins, right? For high grade veins, Timmins style, orogenic gold systems, not a bulk tonnage replacement style gold deposit that tip frankly wasn't very sexy until pretty recently. So and then drilling itself, the holes are all less than 300-400 meters, so very easy drilling, shallow drilling, and the holes and the rock is very competent. We're getting great productivity.
Hmm. I want to do a couple of housekeeping notes here, if you will. With this financing, you mentioned a strategic that goes over 9%. Who's that?
That's Goldfields. So they
Okay.
originally, how they it came to this, when I did my financing in March of 24, I I approached Cisco Mining when I used to cover them as an analyst and as a salesperson, and I was talking about, we made this high grade vein discovery at the GM vein at the time. We got this emerging Argus discovery. This was before we drilled Argus North, so I didn't know at the time, and told them about the story. And obviously the markets were tough at that point. And the Cisco approach is always, drill baby drill. So
Hmm.
they cut me a $500,000 check to get 5% of the company at that time. And I used that proceeds as part of a $1.5 million flow through financing to drill and follow up on the GM vein, which we expanded it. And also we drilled those 5 holes in April of last year. And that's when we used those 5 holes. Hole 163 was part of that. So that's how, thanks to that financing, we were able to discover, Argus North and to lead to this. So when Goldfields acquired Cisco Mining, they inherited that equity, that 5%, and they liked the discovery, and they clearly, have a strategy of wanting to grow, and they've been fabulous partners, and so they were keen to increase their position in us to 99 through this through the non-broker component of this financing. So yeah, it was great, and really enjoy they're great partners, and I think we provide a really good exposure for them in a world-class mining camp in Canada, but also, one of the most exciting areas of Canada, which is, for new discoveries, which is, obviously that part of Yukon.
Hmm. Well, I think the framework at Cisco, they call it SUDS, shut up and drill stupid. I think I heard Sean Roosen say that once. So it is something that I'm passionate about myself, but I'm a bit of a cowboy.
Yes.
Why I'm asking this about the strategic and knowing that it is Goldfields, is there room for a JV? Is that something that you would consider at this stage, or is it too early to even talk about that?
I don't think our ability to execute is strong. So I think, joint ventures um, for Timmins, I don't see. Well, actually, I should take specifically with Munro Croesus. I don't think there's any joint venture, opportunities there. But something like a Golden Mile, we love that property. We don't talk about it a whole lot, but it's got fabulous geology and all the right structures for a high grade Timmins style mine. But there's zero crop, so the average overburden's like 20 to 40 meters, and there's a shallow lake. So the opportunity is something like a Kena, where structures continue under a lake, and then they found it, and then they built a causeway, and there's a shaft in the middle of the lake, right? That's owned by Wesdome. That's the opportunity, but you need like a big company that could say, hey, I don't mind spending a few $1 million to do this
Yeah.
generator work, sonic drilling, base of till analysis, frankly, just, grid diamond drilling, and don't mind, I can afford to miss, a bunch of holes. But once you vector in and hit the smoke, and you can vector in to hit the fire, the fire, the opportunity of what could be a fire, it could be fabulous, right? So that's where, a big company approach could be on a joint venture is great, where, they can come up with the cash, we can be the operators and the executors. But it'd be nice where, as an exploration company, as you raise money and you put it into the ground, you kind of live and die by that drill bit, right? So, if you're not doing that return on investment, it can be pretty challenging, despite being a really a property with high potential, right? So something like that would make sense. And then, Yukon, we always look at opportunity as well. We think we can do it alone, but can we do a structure where we can have do a deal at an asset level where we still maintain a material a percentage interest of the asset in exchange for somebody else to pay and accelerate the timelines of discovery there, while we can be focused in Timmins. There's opportunities for that. I'm not saying that we're actively engaged in any of those conversations, but there's a lot of optionality we have with some of these assets, and there's a lot of interest for those assets as well.
Hmm. Do you feel like you have enough land now, or do you want to keep picking up ground in Timmins?
Uh, the consolidation feels like it's never going to be over, but we got a few more items that are on our wish list that we like. and I think they're very complementary to our Monroe Croesus property specifically. So we're always on the hunt for more, and um, mainly just kind of tucking in some inliers. Just consolidate the land position a little bit more to make it more homogeneous.
What's the permitting situation there? How permitted are you, or how far are you permitted?
So all our properties in Timmins, all three of them are drill permitted. They're all ready. So as we've been consolidating, especially at Monroe Croesus, I've been doing this big consolidation the last 2 years. We acquire and then we submit permits. So every part of Monroe Croesus is drill permitted. We're also about 40% of the land position is actually patent claims. So we own the surface rights and mineral rights. So, things like trenching and a lot of work, you don't necessarily need a permit for. So it's really, and it's much more straightforward for just permitting on general versus like a crown mining patent, right? Unpatented claim.
What about the First Nation situation? What's that looking like in Timmins?
Yeah, so we have three exploration agreements with the key First Nation groups in the area. We of course, we are always implement best practices within the territories we operate. We've got strong relationships with them, and we want to be the best neighbors and best partners we possibly can. And Timmins has obviously got a long history of mining up there. So I would say, the First Nations is quite sophisticated and understanding, the the level of the stage of our company and the level of activities we're doing. And so, yeah, it's great, and I'm really privileged to be operating on their territories, and every day I think it's a privilege, not a right, and I really respect that, and all my employees every day go make sure that we can implement as minimal impact to the traditional territories that we operate in.
Humans are not the only animal living on and off the land, though. Moose and goose and everything else. How's the situation there with the with animals?
Yeah, no, I mean, it is Northern Ontario. There are wildlife. We have, robust and rigorous, environmental standards and wildlife monitoring processes. Obviously, there's always moose hunting season in the fall that you got to be worried about, just be cautious about with hunters active in the fields. But no, I mean, we never have had issues with wildlife of being an issue, or our properties, like I said, are, despite making greenfield discoveries, they're highly brownfield. They've been logged, they've been mined. This is not pristine wilderness. But obviously, I mean, we're not going to take advantage of that either. But we are, but it's somewhere where I think wildlife likes to be more, more virgin areas than the areas that our properties are on.
Hmm. What about the Yukon? I suppose same questions. Permitting, First Nation relationships, wildlife.
Yeah, so obviously up there is, pristine wildlife, and it's remote areas where our properties are. We're in the mix right now. We're going through the tutility assessment process with the Ross River Dene Council, which is the traditional territory that we operate in. And right now we're just working towards an exploration agreement, which we should be hoping to get finalized in the near term here, and then that will allow us to get about exploring this year. We won't do a drill program, or we have the option, we have the capital to do so, but I believe we're mainly going to plan to do is a really rigorous exploration program with channel sampling, mapping, prospecting at our the newly acquired raw intrusion, as well as some potentially some more work at Golden Mask as well. So, but more details on that program to be announced soon.
Hmm. Interesting. So you still, I mean, again, you still want to work that ground this year as well.
Yeah.
What does that look like in terms of timing? I think wildfires are going on there now. Is that something you have to, manage and wait for as well, or what does that look like?
No, we're okay in that part of Yukon. Where wildfires isn't fortunately a risk right now, or not a major risk, or something that would inhibit our ability to operate. But I think getting crews out by early August to do like a month long plus program is highly doable. But we got to finalize this expedition agreement, and we're not in a rush to get up there in the sense like we want to do it properly and do what makes sense. And but I think there's some fabulous looking veins sitting on surface at the raw intrusion that gets all of us excited. And we got to take advantage of the summer season, well, the exploration season, when to get out and continue to advance it towards a drill ready status.
Well, you already answered the JV question about this property, or you touched upon them when I asked you about a potential JV just now, or just before. But what about a potential spin out? Is that something you would consider of these properties, or does that not make too much sense?
I think all options are on the table about that. Whether, we become a big enough company now where our cost of capital is low enough that we can raise enough dollars to go out and execute in Timmins, sorry, Yukon, because obviously Yukon is magnitudes more expensive on a per meter to explore. Fabulous opportunity. You can clearly see, the valuation re-rate if you discover a next valley, right? Look at, Snowline's market cap of what they went from 2020 to now. But at the same time, we got what could be a major discovery in Timmins. So, we don't want Yukon to go to the back burner. We think that there's amazing potential there, and we're the only other gold company that has this immediate exposure to these intrusions right in the heart of this emerging metals district. So, we gotta do some work, but we also, because of that, there's very limited options for people to get exposure. So, can there be ways to reward shareholders through spinouts, joint ventures, or doing a loan? But I think certainly doing a bunch of work this year, I think could create a lot of unlock some more value there. And I don't think we're getting any value for Yukon anymore in our share price. So that could be another great way for shareholders to be rewarded, right, by some additional exploration success, or even if I was a shareholder, maybe thinking about selling shares, would I, want to sell if there's a potential spinout of Yukon, right? The dividend to shareholders. I'm not sure. Like that's not on the table. I just want to make clear that we're not actually, voicing that as something we're planning to do. It's just, this is a hypothetical conversation with us, as there's options on the table, right? We have abilities to do those things.
Yeah. Again, cautioning everyone that these are forward-looking statements, and I like that you're doing that as well here, Brock. And there always is risk and unknowns in exploration and everything. Working two parts of Canada, pretty far away from each other as well. Is that going to add anything to your G&A, or what do you think? What are you budgeting for G&A this year?
Yeah, so I mean, our actually head office is in Vancouver. A lot of our technical team is Vancouver based, so getting up to Yukon is actually quite easy. And also we have a great partner with Archer Cathro, who are the go-to Yukon geoscience exploration consulting firms, right? So they have all great crews. A lot of the vast majority of their employees are Yukoners and First Nations. So they're great partners to do, and they have capacity with us. So that wouldn't be a burden to our technical teams who are focused on Timmins right now. And then our G&A, we typically spend about 1.2 million a year on G&A. So for a company of our size, it's a very modest number.
Hmm. And well, you say typically, but again, the company has really changed. But you think that 1.2 number, is that from last year? Or is that what you're planning for this year?
Yeah, it's kind of like a rolling 12 month. Obviously, we
Okay.
scaled up a little bit on some contractors, but in terms of our full-time employee count hasn't changed much. Do we get, we're largely getting, contractors, right? Geologists and all that stuff. So,
Okay. Does that include marketing though? Because you said you want to do more marketing this year, or get out there and tell the story. Or what are you planning for marketing? How much money are you going to spend on it?
yeah, that does not include, that's just pure salaries. Marketing, or I guess that would get part of marketing would be like between 200 to 300,000, but that includes like, airfare, hotels, that the whole expenses you can imagine. It's not just like, marketing and, just the cost of conferences and stuff like that. That's a real number, not a, you know. maybe selective number that some maybe provide.
Okay. Well, what do you want to do for marketing? What are the plans there? Is it a combination of conferences and digital, or what are you looking for?
Yeah, so I mean, now that we're starting to get into that news flow, and we've had our obviously head down for most of the first half of this year is getting that deal completed, which allowed us to announce the discovery hole, and then complete the financing. So now we got those out of the way, and the checkbox is marked. Now we got the core in the boxes and the drills turning. Now it's time to go into face clients, shareholders, and potential investors. So that's my goal for later this year is to do a lot of one-on-one marketing as well as attend some conferences as well. So I'm really keen to really hit the road, especially to do one-on-one road shows and all that stuff, non-deal road shows. That which is great because we haven't really had that too much of an opportunity, especially it took, like I said, 10 months to complete the deal. So we have to be disciplined and quiet. So it's not like we should be spending money to talk about things we can't talk about. So now that we have all that behind us, we can really start to roll out something exciting. And I think obviously step one is talking to individuals like yourselves, well-respected, interviewers and top resource talk shows. So, that's the first step we can do anywhere. And then now we got to get boots on the ground and start to, sit down with potential clients and existing shareholders.
Well, I appreciate you saying that there. I will take every compliment that I can get. So it does mean a lot. Let's maybe work toward wrapping up here and catching up in a couple of months' time here, Brock. What keeps you up at night as a whole? I asked you that question about the rocks, but what about the company as a whole? I mean, are you looking at the share price and kind of sweating, or are you looking at it and staying awake from excitement, or is it something else that keeps you up at night?
If you look at the share price every day, you must have some thick skin, right? I mean, we're early stage exploration in a very volatile industry, right? So, you can't stress about the day-to-day moves in our share price because obviously, it's a very volatile market, right? And also, liquidity has always been, traditionally an issue, right? Where a little bit of selling or buying, vice versa, can move us along a lot of ways. So, I think I like to measure myself against benchmarks, the GDXJ, individual Inc. camp comparables, other exploration like in Timmins and other exploration companies in Yukon. Those are the type of things I like to measure myself on. How are we beating that, or how are we underperforming? What are the metrics? Why is that? How could we improve that? And those are the things that I'm focused on. And then, for me, that really keeps me up at night is just the overall health and safety of my employees, right? It's a dangerous industry, right? Employees are in helicopters. We're driving on the road a lot. The guys are in the bush. So, exploration and execution risk. That's always there. But it's a black box. Geology is going to give you what it will deliver, and we'll learn and we can improve that. But that's something you can't necessarily control too much. It's what we can try to control, and what concerns me the most is obviously the health and safety and the environment as well of my employees and the environment we operate in.
Hmm. Well, that's a decent answer. It seems like you've thought about it before, so I do appreciate it. What else here at the end? What am I forgetting to ask you? What did you come here hoping to talk about that I failed to bring up?
I think we covered a lot of it. And just I think the key takeaway I would love for viewers right now is that I think we're demonstrating to something it's early days, but we're demonstrating that something that could be very quite significant in a world-class mining camp. So, we're really excited about this opportunity, and I think the rest of the year would expect to have a significant amount of news flow. And yeah, no, I really appreciate everyone's attention today, and I hope to meet some of you maybe at some of the conferences and around marketing. So I really appreciate the time, Antonio, and asking such great questions, and I certainly look forward to doing this all over again.
Hmm. Well, I really appreciate your time. Thank you so much for sitting down with me today.
Awesome. Thank you. Thanks, everyone.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. So unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find a company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."